Joining us right now, the founder and chief analyst of disruptive tech research, Lou Basenese. Lou, good to see you. Thanks so much for joining us. The monthly active users here rising to 328 million. What's your take on the Twitter quarter?
Less bad is not good here. I think you mentioned just before, this is really just trying to work with the base that they've got. I'd be curious to see, I don't have the breakdown in front of me, where the U.S. user base growth was. For the last couple quarters, it's been stuck at about 66 or 67 million. Twitter is really struggling here, I think, to re-energize growth. Even President Trump can't make it happen. And I think there's a fundamental problem in play here, and that's the fact that Grandma gets Facebook, but she still has no clue what Twitter is good for, and that's showing up in the user numbers. I mean, Facebook's at 1.8 billion active users, and Twitter's stuck here at a fraction of that amount, and I think that's going to persist.
Lou, is this plan still to find a buyer for Twitter? Because the one thing, and Kirsten actually touched on it last hour, one of the things that gets in the way of Twitter being possibly acquired is that a potential buyer sees it as just being, well, in part, a cesspool, to use Kirsten's word. Again, there's so much negativity, and people don't use it in a way that you can really monetize their behavior in the forms of serving them ads.
I think the price has to be right. It really comes down to that. You've got, like you meant, a cesspool. There's a lot of fake users, fake accounts. Some people would say fake news. Media types like ourselves find it indispensable. I mean, I'm sure we can all agree on that. It's the place where real news breaks. We can monitor that. But for an acquirer, it's the values in the network, right? I mean, Yahoo proves this out. Years and years after trying to re-energize growth at Yahoo, it still found a suitor in Verizon, and that's because they have a user base.
That's also, Lou, I'd like to just jump in there. I think they also found, I also think they found a buyer because they have a good management team. The problem with Twitter that we've seen consistently over the last 2 years is management and who's leading it, what's the direction of the company. You've had management come and go. They've lost a lot of top people. There's no conviction, especially for the employees. You've got a CEO that's got 1 foot in the door, 1 foot out the door on another company, and that's a big problem. And I think that's not only a problem with the employees, but I also think it's a problem with companies that want to deliver ads and be on the platform because they don't know if he's going to be around or he's not going to be around.
Now, listen, no man can serve two masters. He either loves one or hates the other. And I think you have that in Jack Dorsey. I mean, he's got to pick. Pick one, Square or Twitter, invest your energies there. And I think it's problematic. I mean, you look in the annals of stock market history, you have a lot of CEOs that try and come back and revive and revitalize their companies. But the ones that succeed are few and far between. And like you said, he's trying to pull off the near impossible while having another job at the same time. So I think that is absolutely a takeover deterrent. Price becomes the key factor. Can I buy 320 million or so active users at an attractive price and do what Twitter has failed to do and monetize those users?
The stock is on fire right now. It is up 13%, Lou. I mean, the whole technology sector we know is doing well, despite President Trump's stance on international trade and immigration. You have Google hitting all-time highs, Alphabet, parent of Google, rather. NASDAQ Composite top 6,000 for the first time ever yesterday. What's your take on these surging valuations here? And with Twitter right now up 13%, are you a buyer or seller?
No, I'm going to take my profits off the table if I was owning it right now and be thankful. I mean, historically, Twitter's been a terrible stock to own on earnings days. It's usually down by double digits. So the fact that it's rallying by double digits, count your blessings and move on. I think a takeover happens if the stock gets, it has to stay below $13, $14 for that to happen, and you get back to right where we're at now, I think, in my opinion.
Right. But
as far as
Lou, sorry, don't mean to cut you off, but
sure.
Maria touched base on it earlier, talking about valuations. If we go back, tech doesn't seem too expensive here, given how they're growing. So Twitter aside, if we start to look at U.S. digital ad spend, probably around $85 billion. It's growing at about 20% clip. You have two winners from Google as well as Facebook. They have the ad platforms. That's why Marissa Mayer wasn't successful with Tumblr, because she couldn't serve up the ad platform, and then she ended up using Facebook's. So can investors still look at growth in this area and not think it's too expensive and have comfort going into names like those?
Yeah, look, if I had the triumvirate to pick from, either Google, Twitter, or Facebook, I'm going with Facebook and Google. On a valuation basis, they're trading at about 20 to 21 times forward earnings versus Twitter at 40 plus. You mentioned it, $85 billion up for grabs. You don't really have to worry about innovation in the space, from Snapchat. Facebook has shown that whatever Snapchat innovates, it's going to mimic within, a window of a couple weeks to a couple months. So these dominant players in Facebook and Google in the ad space are going to continue to be the dominant players. And if you're going to put money to work, I think those are much smarter plays than betting on Twitter. An investment in Twitter right now is a Twitter in hope, and hoping that it gets acquired at a higher price than it's trading at right now.
I just wanted to point out, revenue year over year for Twitter actually fell for the first time since it went public. It didn't fall as much as analysts were expecting, but it was still down from $595 million last year to $548 million this year. So that just says that we've got this user base, and it might be growing a little bit, but we can't figure out how to extract money from these people.
And you just don't see the kind of innovation from Twitter that you see from these other platforms. I mean, with virtual reality, even what they talk about, even what their CEOs talk about and what they're planning for the future, you don't see that kind of forward-looking vision for Twitter. And users have a short attention span now, right? They want the next thing, they want the next filter, the next gizmo on their phone for the app.
If you're an advertiser, where are you going to go? You're going to go to a platform that has over 1 billion users,
right,
and better analytics.
Yes.
Think about it. If I'm a small business, where am I going to advertise? Twitter? No. But yeah, I'll go to Instagram, I'll go to Facebook, I'll go to Google.
Absolutely.
Those are the ones you're going to spend. And so as you see that ad spend that we talked about earlier, it's going more towards those platforms that have proven themselves, that have the data and analytics. Twitter does not have that, and it might be tough for them to get acquired just due to the fact of the anti-competition rules that we can see. I mean, if Google takes Twitter, can that get through the regulators?
No. By the way, Microsoft bought LinkedIn, so that got done. But it goes back to the talent issue, that a lot of the talent at LinkedIn have been promoted within the company. I know for a fact that the chief technology officer at Microsoft came from LinkedIn, that they promoted him up through the company. So.
I like the way you characterized it, Lou, at the beginning of our interview. You said less bad does not mean it's good.
No,
I think that's probably the characterization of the Twitter quarter.
Yeah, I would agree. I mean, look, you're coming around. The key data point I focus on, Morgan Stanley noted it recently, that based on ComScore data, mobile engagement is down 20% at Twitter. And, Twitter account 90% of their advertising revenue comes from mobile. So if you're looking for them to make more money on a stagnant user base, the engagement trends are heading in the wrong direction for that to happen. So.
All right, Lou, we'll be watching. Thanks so much for weighing in this morning.
Thanks for having me.
Lou Basenese joining us there.